And we've got Larry Ehrlich with us.
Hello, everyone.
All right. And so that is the Mortgage Dad, and that is my co host, also Mortgage Mom, AKA Heidi. And here we are. We are bringing this to you live. And of course, we have to do this as a Zoom meeting because there is no other way to do it when you are social distancing. How are you guys doing this week? What's going on, Larry?
Oh, just trying to help people from home. It's kind of different, but actually it's good. I don't have to shave every day, as you can see.
And you mentioned right before we started that you weren't wearing pants. Has that been a nice thing for you?
Though I have pants on. It's way better that way.
All right. And Heidi, how have you been doing at home?
Um, well, I'm surviving.
Yeah.
Yeah, I'm ready to come back to the office, but I'm doing good, getting the house clean. I wish I was staying caught up on laundry, but I'm not. It's still doubling and tripling in size.
Yeah.
But yeah.
I'm starting to get a little stir crazy. I came into the office today. We didn't have a show last week. We were off because of Easter. We took a break, and so I didn't come in last week. So it was 2 straight weeks at home, and I got to tell you, it's really kind of nice being here. I mean, nobody's here, so obviously I'm social distancing, but it is really nice to be out of the house. Hopefully we can all start doing that a little bit more. It sounds like they're going to start working on getting us opened up a little bit, and I'm very, very anxious to see what that really means and how is that going to work. I'll tell you, one of the things that I've been seeing a lot of is Apple and Google actually trying to get together and create an app that we can all download to our phones so that they can kind of trace us in case somebody does come down with it. And I know that there's been a lot of people that have been, trying to say, well, that's, against our constitutional rights, and then they can track us. And I mean, let's just face it, they're tracking us anyway. So I'll tell you what, if it means that I can go out and do things, if I've got to download an app so that they know where I've been and what I've done, and I'm down with it. Tell me what to do, where to download it, and it's on.
Agreed.
Me too. I mean, seriously, I talk in my house, and I'm pretty sure Alexa knows what I do, when I do it, who I talk to, but no one cares.
No.
I am not that special.
Well, yeah, and we've all got Alexa, and apparently she listens to everything that we say, and it's all recorded up in the cloud. I mean, there's so many things going on today. I highly doubt that our privacy is really there the way that we think it is. So,
Right.
I'm into it, man. Tell me to download something, and I'll download it.
Yeah.
Yeah. So, mortgage world has been a little bit crazy. I know, Larry, you were actually just sending me messages today. We all work together, daily, and we talk about what's going on with mortgage. We're making sure that we're all in the loop. You're reading things, or you're running into something I haven't run into yet. And there's so many changes so fast that we can't all stay on top of it, every single piece of it, right? So you were mentioning something about MI today. Can you talk about what you found out?
Yeah, I was talking to a guy from one of the MI companies that we work with, and he had told me that MI is going to start to tighten up. In other words, their premiums are going to be more expensive than they are currently. There's several ways you can pay mortgage insurance. You can pay it monthly, you can pay a one-time premium, and both of those kind of avenues are going to go up in price very shortly.
Yeah. So for everybody that's listening, wondering, what is MI? MI, we're talking about mortgage insurance. It's something that you do get on your loan if you do not have at least 20% down payment, or even if you're refinancing, if you don't have 20% equity in the home, we do have to give you mortgage insurance, whether that be like Larry just said, whether you buy it out up front or you pay it on a monthly basis. It is something that exists when you have less than 20% equity in the home. So, that is something that has actually been, fairly inexpensive in all regards, here over the last few years. And so it sounds like that's going to go up. It might be something that we start looking at FHA as, a better option, depending on how expensive that mortgage insurance gets. Just out of curiosity, did that mortgage insurance, guy you're talking to, he's a sales rep for Radian, correct?
Correct.
Yeah.
Yes.
Did he happen to mention how much that they were anticipating, or what kind of where it would go?
He didn't say. He said it was definitely going to go up. He was waiting to get the changes too, but he was saying that if you have a chance to lock it in today, it's going to be cheaper than it is, going to be over the next month.
Gotcha.
So he's just suggesting that if you can lock it in today, you have somebody who's, buying a home today, get that PMI quote, get the mortgage insurance quote now, sooner the better, because it's just going to go up in price. And mortgage insurance is based on several factors. One of them, credit score. the higher your credit score, the lower that premium is going to be every month. So, if you're out there and you're getting ready to pay down some credit cards, if you can, try and keep those balances low, because that's going to affect your mortgage payment in a lot of different ways.
Right. And, a couple of things to think about with that too is that the, mortgage insurance will change how much that you can qualify for. So, depending, it's a part of that monthly payment. So it's factored into that debt ratio. If that gets really expensive, that's going to bring down the amount that you can actually qualify for. For that sales price. It's also going to change how much you can qualify for with that refinance. And so, again, if you have less than 20% equity, that doesn't mean that you can't refinance, but you would have to pay for mortgage insurance. It'd be a good time to get that quote in. How long, he said 90 days?
He said they'll honor the quote for 90 days. So, which is nice. And it's nice for him to give us that warning so we can take care of our clients in the proper way. So that's a nice thing that he did for us. And because I hear a lot of banks are tightening up, like if you don't have 20% down, some banks aren't going to give you a loan, period.
Right. Yeah. And we're going to talk about all of the changes. So we'll definitely get into that too. I love that you've got some great information for us. That's why we call you our mortgage dad. You've definitely been around the block. You've been doing this for how long, Larry?
32 years.
Yeah, you got me. I mean, I'm over 25 at this point, but still 32 years is a long time.
Long time.
All right. So I do want to say hi to Erica Joyce. She says, hi, we love that you're watching. Everybody listening to us, we do record this on Wednesdays at 5 o'clock. We're live on YouTube. And then we turn it over and we send it to the radio station for Saturday morning. So if you're listening on radio, you guys want to watch us actually record it live, please find the Mortgage Mom Radio channel on YouTube, subscribe, and turn on your notifications. That way you can watch us do the show live. We'd love for you to put information in the feed, just like Erica said hi. We've got Lori. She says hi. Thank you guys so much for watching. We love it. If you have any questions at all, anybody else that might be watching, please make sure that you guys put those questions in the feed. I'm going to make sure that I read those and that we get those answered for you. So, again, if you guys are listening on Saturday morning, we love that you guys listen to us right here on Go Country 105. But we would love you guys to watch us do it live, and we'd love to get those questions answered. If you want to give us a call and you want to talk directly to the mortgage dad, you guys want to talk to Larry, call my office. It's 844-935-3634. That's 844 We Lend for You. That is LEND and the number 4. Larry will take your calls on Saturday. He'll take your calls on Sunday, and he will get all of those answered for you. He'll get those MI quotes run and make sure that he gets you locked into that lower mortgage insurance premium. So that's kind of a big thing. So, okay, you started to talk about another change that you heard. So let's get right into that.
Well, I don't want to mention the bank's name, but I heard that effective Monday that they will require you to put 20% down and have a minimum credit score of 700.
Wow. And now is that on for a jumbo loan or is that for?
No, that's just every loan.
Okay.
Every loan. So, which affects a lot of people. Most people do not have 20% down, especially first-time home buyers. They're struggling every month to save, a couple dollars to put down a down payment. So that's going to affect a lot of people.
It really is. Yeah.
It really is. So
And is that bank
take that stance?
Yeah. Is that bank that and obviously we're not going to bring up names. We don't need to get scolded for saying something that's incorrect, but that same bank, they're not doing FHA or VA? Are they still doing those programs?
I haven't heard, but I'm assuming they're not doing FHA and VA because those are low down payment, high risk loans. So I assume they're not doing those. It's strictly conventional, and even on their jumbo product, they've tightened up their restrictions. So if you're buying, a big house, a dream house, and you're spending a couple $1 million, they're going to make you put a lot down just to buy that home.
Yeah. Well,
it's going to have a negative effect on a lot of people.
It really is. And that's one of the nice things about us, working for a mortgage bank is that we don't have just this blanket of guidelines and it's one bank that we're doing our lending through. We have many different sources that we can go to. So we haven't lost our VA. We haven't lost our FHA. We still have those low down payment programs that are really good. But, that a lot of people will feel like I had somebody this week that said, they wanted to be with their bank for their mortgage. It was really important to them that they were making their payment to their bank. And, I can kind of understand that. I mean, I can. Sometimes people just feel more secure in doing what they know and having everything in one place. I can absolutely understand that. But this is going to be the time, as we're kind of moving into these next the rest of this year, really, where there's going to be a lot of question marks with what's happening with the economy. This is where we're going to shine and where we're going to stand out, because we're going to reach deep and we're going to try to find those places where we can
Excuse
go.
me.
Oh, bless you. It's okay.
Thank you.
Just don't cough. Just don't cough.
I will come.
But we're going to find those places where we can send that loan to get those deals done. And so it really does make a difference who you're working with right now in today's environment. So some of the things that have changed, and I kind of want to explain this because I had another person on the phone a little while ago, just a little earlier today, actually, and we were talking. It was a pre-approval. The girl's not thinking about buying anything until next year. So she was just kind of starting to get her feet wet, understand what she needed. Where does her credit score need to be? What does her down payment need to be? And I was very, very honest with her. And I said, look, if you had called me 4 months ago, I would have had very straightforward answers for you. But because you're not looking for something for a year out, it's really hard for me to say that this is exactly the steps that you need to take. And yes, you're going to qualify, because we don't know what those guidelines are going to be. They're changing every single day. So, the best advice that I could give her at the time was keep working on your credit, keep making all of your payments. Even if you have the opportunity to do a forbearance or, delay a payment, if you can continue to make the payment, keep doing that, because nobody really knows right now how that is going to affect us. We don't know, Fannie and Freddie and FHA and all of those, they're all going to at some point start to review everything that's taking place right now. And then they're going to start to create guidelines around that. Just like when everybody started to modify their loans back in 08 and 09 and there were short sales and foreclosures. Then all of a sudden the guidelines started coming out to how long does it need to be before you can do this. And if you had a loan modification, but you had some forgiveness in the loan, now can we do another refinance? We don't know how they're going to look at those payments yet. And the last thing that you want to do, if you have the money to make the payment, is to stop making that payment, because it really could exclude you from being able to do something else down the road. So, the best advice that I could give her was keep working on your credit, keep saving your money. Try your very best to have at least 5 to 10% down payment, because she was just really at that very beginning of where do I need to go? What do I need to do? Try to get as much of your debt paid down as you can. And, that's going to put you in the very best position in a year from now to be able to buy, no matter what those guidelines are, at that point in time. So some of the things that we've seen are, credit score increases. Heidi, what are some of the credit score increases that you've seen that have come to play?
So they have not been fun recently, because some of them impact clients we have in process today. Anything under a 640, we're not going to be able to do. So you have to have a 640 or higher. Correct me if I'm wrong, but 640 is still acceptable.
Yep, that is
acceptable.
Mm-hmm.
Can't even speak right now. Sorry, I'm very tired today.
That's okay.
And then in certain circumstances, you have to have a 680 or higher.
Right. Absolutely.
And then again, going all the way up to a 700.
Right. So one of the things that I do want to point out on that is that, there's a bunch of investors, obviously, that buy into loans. And we've kind of talked about this on the show before. And anybody that's listening that wants to understand better, feel free to call the office, schedule an appointment. I'd be happy to do an hour conversation with you about how the secondary market works. But we've got investors that invest into these loans. And right now, they're feeling that the risk is not worth what the gamble, right? So before we could do an FHA loan at 580, sometimes lower, a VA loan, the VA's guidelines are 500 or better. So obviously it's very difficult to get that loan approved at 500 because there's probably some really nasty stuff on that credit report. But we were easily doing 560s, 580s, 600 all day long, right?
Yeah.
And they haven't changed their guidelines. But what is happening is that there aren't any investors that want to put risk into that. They don't want to buy that note, because the first chance that property values drop, there's, you're putting zero down payment into the home. it's so much easier to walk away. And so that's the risk that they take at putting their money into that note. So they're coming back and they're saying, look, we're not buying loans unless they're 640 or better. So right now it's the investors that are ruling the market. It's not necessarily the guidelines or the agencies. So I do want to make sure that people are understanding that. You can look up the guidelines all day long on the internet if you want to. You can look up VA guidelines, you can look up FHA guidelines and conventional guidelines, and you're going to see much lower credit scores, and you're going to think that we're giving you false information. We're not. It's all about the investors that are willing to buy the loans. We can't fund a loan and hold it in our portfolio. We've got to turn around and sell that to an underlying investor. And if they're not willing to buy that money, that means that money stays on our books. So, just keep in mind, guys, everybody out there, if you've got under a 640 credit score and you've been thinking you might want to buy a house, even if you're a veteran or even if you've been pre-approved already, you need to make sure that you're reaching out to your mortgage lender and that pre-approval is still existing and that they still have a loan for you. We got a phone call last Friday that said, hey, you guys have 4 loans in process right now, credit scores under 640. If they are not funded by the 28th of this month, they will not close. We will have to deny and cancel the loans. We don't have investors for the appetite of an under 640 credit score. That's not me. I'm just the bearer of bad news when I have to make that phone call. So, something definitely, the things are changing, and it's because nobody knows. Nobody understands where we're going to go. We don't know what it's going to look like when we open back up. We don't know how many people are going to get their jobs back. There's a lot of people on unemployment right now, many of them assuming that they've got a job to go back to when this is all said and done. But there's going to be a lot of businesses that really can't make it back. And you may not end up with a job. And so they're looking at, hey, where are things going? And there's all these question marks, around it. And so it is we're starting to feel that pinch.
Right.
There's a lot of changes too to debt ratios. So I know, Larry, you were talking to me a couple of days ago as well. You had somebody pre-approved, that you'd already done the pre-approval letter. They've been out looking for a house with a real estate agent. There is absolutely no way that we could have known that this was coming. And
Sure.
they wrote an offer on the house, and then all of a sudden you couldn't do it. So talk to us a little bit about those debt ratios and what you're seeing.
So, up until, things started to change, FHA financing, they had the most expansive guidelines. FHA is really lenient on qualifying people. So, but during this, I call it the carnivorous virus because I think it's just eating people up.
There you go. I like it.
So, during this, like Debbie had just mentioned, lenders are tightening up and they're unsure and investors aren't willing to buy certain kinds of loans. So HUD has come out and said, okay, well, we'll still do FHA loans. We'll still do a small 3.5% down payment. We know people need those. We know first-time buyers are really important. We want them to get a house. But instead of going up to, they would go as high as 56%. And when I say that, that means they take the housing payment, your taxes, insurance, all your debts, and divide it by your gross monthly income. And it really should not exceed 56% of your gross monthly income. Well, HUD's come out and said, well, we still want to do these type of loans, but we want it to be no more than 50. Mm-hmm. Well, of course, the client I was talking to, wanted this house and he really wanted it. We really got lucky because after reviewing his pay stubs, and I got his pay stubs from last year, it turns out he had a lot of overtime. So we were really lucky. We were able to talk with the underwriter, go over the overtime, what he made in 18 and 19, and average it. And he picked up an extra $600 a month, and that put him back under 50, and he's all happy, and he's in escrow and is able to buy the house. So, but you really have to know, what's going on and what's coming, because you might be working with a lender and they might be telling you one thing. And if you don't stay in touch with them, your qualifications can change, just not because the lender doesn't know what they're doing, but the market's changing really quickly. So you really need to be in touch with your mortgage lender and make sure they're on top of it and make sure that, they're watching out for you.
Right. Now there's even more to that too now. So the 50% debt ratio is if your credit score is over 680. Correct?
That's right. Correct.
So if we are under 680, which we know that 640 is going to be the lowest we're going to go, you can only go to 45 debt to income ratio.
That's correct.
There is a humongous difference in a sales price between a 45% debt ratio and a 56.9% debt ratio, which is what we were doing before. And when I say 56.9, I'm not kidding. We were pushing people to that 56.99%. And as long as we didn't get to 57, we could still get that loan approved. So, going from 56.9 to 45%, could mean the difference, honestly, of almost $200,000 in your sales price capability. So if you have been pre-approved and you know that you were, stretching those debt ratios, or you heard your mortgage officer say, we're going to go FHA because that's going to help you qualify for more, make sure that you're reaching out again and that you're finding out how much can you still qualify for today. Where really are you?
I want to bring up VA.
Okay.
So on the debt to income ratio on VA, we've been able to push that. I mean, sky high. Sky high.
65. Yeah.
I've got it approved at 69.8.
Yeah.
Wow.
Not happening anymore.
No.
I mean, it has really, really dropped down. So again, like Debbie's saying, Larry's saying, if you've been pre-approved and you were up there in your ratios, but you got an approved eligible, your mortgage lender said you're good to go, you need to keep in touch with them, because you may not be anymore, or you may need reserves you didn't need before. So you might have to have extra cash in your bank that you didn't have. So just something to mention. Everything's coming back a little different. It's changing daily right now. The risk appetite for the investors is just not there right now. They do not want high risk. They're looking at lower debt ratios, higher credit scores they want. Cash out loans are much harder if you can do them. Investment loans. So if you're looking to buy an investment, you're looking to do cash out, you've got those higher ratios. You've got to get in contact with your loan officer, your mortgage lender, to make sure you're still in good standings.
You do. And if you guys have any questions, please feel free to call. It's 844-935-3634. That's 844-WE-LEND-FOR-YOU, LEND, and the number 4. Get on the calendar. You could talk to me. You could talk to Larry. You could talk to Heidi. Get on our calendar. Schedule an appointment. It's a phone consultation. Let us talk to you about your scenario. Let us bring you through where things are at today, and make sure that you're in good shape to move forward. One thing that I do want to bring up that's really big is that interest rates have been going woo, right? They've been going up, they've been going down, they've been going up, they've been going down. And there's been a lot of lenders. I've had multiple phone calls. So back a month ago, and I would say it's been about a month, maybe just a little bit longer now, maybe 6 weeks ago, let's call it 6 weeks, interest rates hit the ground. I mean, they just went down so far. And that lasted, about 2 weeks, with March 9th being the very best day we had for 4 hours of that day. Then from there, they've been a roller coaster, just an absolute roller coaster up and down. There are a lot of clients that I have talked to on the phone that I quoted a rate to, that they got a lower rate quote somewhere else, and they are now all coming out of the woodwork and starting to call me back because their lender either didn't perform and didn't get the loan done. They've had their loan canceled because they've been called and they've been told that they don't have any money left to be able to fund loans. So the loan that they had, that they locked in, now they can't have. I've had people call and say that they, what they were quoted at the beginning, now they're at docs, and now their closing disclosure does not look anything like what they were quoted. And of course, all these people are very upset, because if they had just worked with me, even though my interest rate was 0.125 higher in my rate quote over the phone, if they had just worked with me, they'd be closed. They'd have a really great loan. They'd have really great fees. And they didn't. Obviously everybody's out there shopping and they're looking for the best deal that they can get. And we understand that too. I am the very first person every single time. And Larry's heard me on the phone. Heidi's heard me on the phone. I will tell people that sounds like a fantastic deal. Go get it. I can't get you there. But what we're finding right now is that it is very, very important that you guys are working with a good, solid company that has been in business and that has a good portfolio and that is not going anywhere. So, if you've had those problems, and I've had 3 calls just this week, all 3 of those scenarios. One said that she got a phone call that said that they don't have any more money to fund any more loans, and it was a giant company. that I was absolutely shocked. And I'm not going to say that one, who it was, but they have no more money. They told her that she could stay on hold. Now, mind you, she's already paid for an appraisal. She could keep her loan on hold, and they couldn't guarantee her what the interest rate would be, but when they were ready, that they would get back to her and let her move forward. I had another one who they switched him and gave him one rate, and now he's at the closing table and he's got almost 2 points in cost in in discount points that were not quoted to him. And I have another one that called and said that they got this great deal, and I said, send me over the estimate, let me take a look at it, and the rate is not locked in, which I'm not saying that is a bad thing. Interest rates very well could go down in the future, but we don't know. That it's like gambling, right? You're in Vegas and you're standing at the table and you're going, do I take my money because I just hit big, or do I gamble and try to get more, right? If you like the interest rate that you've been quoted, the payment works for you, to float it out may not be a good idea. If the rate is not quite where you want it to be, floating it out and waiting it out is a good idea. So it really depends on your circumstances. But what I'm hearing is that there's a good amount of companies out there that are not allowing their clients to lock the rate. You have to get the loan started. You have to get your appraisal done. You have to be almost at the closing table before they're allowing rate locks. Why does that happen? Well, there's hedging and there's all kinds of things that are going on behind the scenes. The lenders are overwhelmed in volume. They can only move so fast. There's too much in extension fees. There's too much in hedging, risk cost, locking cost. And so a lot of these companies, the way that they're trying to kind of scale back a little bit is saying, hey, we can't lock you in right now, but it's a great rate. You should still really do your application. If it's a great rate, lock it in. If it's not quite where you want it to be, do I think that rates are probably going to go down a little bit more over the coming weeks and months yeah, I think that we'll see, as everything stabilizes, I think that we'll see a little bit of a pickup and we may get a little bit better pricing. But, those are things that are going on right now, in the mortgage world that people need to be very aware of. The jumbo lending, I know, that has been just absolutely crazy right now. It's very, very difficult to find jumbo lending. And we do still have resources to go to get that jumbo lending done. But there's banks such as, Wells Fargo, for example, and I'm not going to talk anything smack about Wells Fargo, but, in 07, 08, 09, when everything was crashing, their little banking history that they had that went on with the accounts and stuff. So they took TARP funds. They were actually told that they could only grow. They've been restricted because they took kind of bailout funds. They've been restricted that they can only have a certain percentage of growth per year, as a company, because they had to take those bailout funds. So, you're not going to get bailout funds and then be allowed to grow exponentially, right? They're going to limit how much that they can grow. And so what's going on is that there's been so much volume come in because of the low interest rates that they have basically hit their peak of what they can grow. So that is why they've changed a lot of their lending guidelines. And that's why a lot of these other big banks have changed a lot of their guidelines. A lot of them are cutting off correspondent or wholesale business, broker business altogether. Some of them are making it a lot more restrictive to get the financing, even if you're going retail from, walk into your bank and apply for the loan. What are some things, Larry, that you've been hearing on that front as far as jumbo lending? Because I did tell everybody last week we were going to talk about, not last week, the week before, we were going to talk about jumbo, and then we never got to it. So what have you been hearing on that front? What have you got? What's your takeaway?
Well, I got a call, last week, and they were buying up a house about $1.5 million, and they were going to put about $400,000 down. And then they went to, the bank that looks like a stagecoach.
Okay.
Not to mention names. And they told them that they didn't have enough money in reserves, that they wanted them to have $250,000 in reserves before they would approve their loan. And they had good credit, and everything. And jumbo rates have really, have shot up. They really haven't been where they were, a month ago. But, we're going to be able to do that loan for them just because, they have enough reserves for us. But banks are scared, I think, and they don't want high risk loans. And jumbos are high risk just because of the loan amount size. They're risky, and all banks are doing all the the PPP loans. They're doing all the small business administration loans. They're doing all that, so they're overwhelmed. Period. Not just with mortgages, but with all types of lending that the government's approved. They're handling all that too, so they're just completely overwhelmed, and they only have so much room on their credit lines or warehouse lines where they draw money from to fund loans, that they're overwhelmed, and they're tightening up, and they don't want them. They really just don't want them. So I think you're going to see the market continue to shrink a little bit before it starts to expand. I mean, just like in 2008, everything shrunk. If you didn't have this, you weren't walking on water, you weren't perfect, you weren't going to get a loan. What we saw as time went on, guidelines start to open up and start to expand, and that will happen again. I don't know. I'm thinking it's going to happen faster than it did last time, but honestly, we don't know. So if you're looking to buy a home right now, I know it's hard because some people don't want you in their home, but it's actually a great time because if you wait a month or so, you don't know where it's going to be. Restrictions, it could get tighter. Instead of we're talking about 680, maybe it gets to be 720. Maybe you no longer fit in that guideline. So I think they're going to get tighter before they get looser.
Yeah. No, I absolutely agree with that. And, the other thing with a jumbo loan, so, you've got your normal lending that is all of your conforming loan limits. And those are all really, they're being backed by Fannie Mae, Freddie Mac, FHA, VA, USDA, right? If you're in that category, the banks can write as many of those loans as they want, and they can turn around and they can flip them, and they're selling the actual mortgage back, right? That's why they call it mortgage backed securities, but they're selling that note to Fannie Mae, Freddie Mac. That's who's backing that mortgage. It's not the actual bank's money, right? With a jumbo loan, anything that's over those guidelines, that is the bank that is lending that money. That is their money that they're lending. It sits on their portfolio. That's why sometimes you'll hear it called, it's a portfolio loan, or it's a jumbo loan, or, there's a lot of words for it. But they have to hold that money on their balances. And then that's also what makes them grow, and that makes their portfolio grow. And, so a lot of them, again, are not quite sure where things are going to go. Everybody is looking at this going, where are we going? What exactly is going to happen? Are we in a recession? Are we not in a recession? Are property values going to drop? I mean, I'm getting calls daily from people that are saying, do you think that I should still buy a house right now? Do you think I should wait? Do you think I should sell? What do you think that I should do? And I had actually a really long conversation just yesterday, actually, with a past client of mine. And, the way that I explained it was, you bought a house 2.5 years ago. You've got equity in that house. If you turn around and you sell that house right now today at today's values, and you take your equity and you go and you buy another house, you're taking your money from one house and putting it into the other. So let's say that you sell this one for $500 and you buy that one for $900, right? And you brought your equity over. If you wait, you're going to sell that one for $400 and buy that one for $800. It's literally, once you're in the market, it doesn't really matter anymore, right? Because you started in the market. And that's the whole thing about this Mortgage Mom radio thing, right? We're always trying to get people, get in the market, buy a house. Then I've had other conversations with people where, they're renting and they're throwing their money away, and they're, should I wait? Should I wait for, property values to drop? So number one, we don't know if property values are going to drop. That is something that we don't know. We're not looking at least this is Mortgage Mom's opinion, we're not looking at 07, 08, 09, where we just absolutely, the real estate market just fell apart. Those were people that got loans that should have never gotten loans, that couldn't qualify to buy those houses, couldn't afford those monthly payments when they did. They were buying homes with zero down. They were buying them for a flip, for a quick, fast investment, and all of a sudden they got caught with their pants down and they had to hold on to that property. They couldn't afford the mortgage payment. They had no equity in it. They put no money into it, and they walked away. Since that time, really since CFPB, which we all got angry when the CFPB came in because they all gave us guidelines and regulations, right? But ever since that time, we've been qualifying people. They're qualifying full doc. They're using W-2s and tax returns and their bank statements, and they're showing us their money, and they're putting money down into the home. And, they have to qualify to afford the house. So, could there be somebody on your block that lost a job that doesn't end up getting back to their job? Yes. If the government comes out and does a blanket statement, which I actually saw them, I was watching, I think, Fox News the other day. It was a couple days back during one of their, White House meetings, daily briefings. And, somebody did bring that up. And it was mentioned that the federal government is looking into how they are going to help the servicing lenders that are right now trying to figure out how to deal with all the forbearances and trying to work with people. If they can come out with some sort of help and blanket, this is how it's going to work and this is how it's going to happen and this is how we're going to help our people. If they can come out with something like that, we very, very well could help 70 to 80% of the people that could lose their homes, which means that our market's not going to get flooded, which means that our property values aren't going to drop. So we really don't know what's going to happen. But at the same time, that 70 to 80% that we could help is going to be a much, much smaller percentage than what we saw in the past because everybody qualified for their loan. So as long as they're still working or they do get back to work, they have the ability to repay. And that was the whole ability to repay, the big, ATR that was the huge deal that came out in, what was it, Heidi, 08, 09? It was like,
I think 9.
Yeah.
It came out.
Right. In 09, we had to make sure that
9 or 10, right?
Right. There had to be a benefit to the borrower to do a refinance.
Right.
They had to be saving money. We had to prove that they had an ability to repay. And this is carried through all the way through today. It's not like, as the market started to get better and the economy started to get better, that they started making things easier. They didn't. There were a couple of new loans that surfaced, the bank statement loans that resurfaced. But, truly a bank statement loan, they were really good about those too.
Yeah. Well, really what they did is they removed some overlays, right? They still kept ability to repay. They still kept verification of employments intact, making sure they were within 10 days. They still kept doing transcripts on a good majority of loans to make sure what you provided was what you actually filed and what you made. They just removed some of the overlays that maybe were layer on layer on layer on layer. And when the CFPB came in, there could have been 20 to 50 overlays on a guideline for Fannie, Freddie, portfolio, loans or jumbos, large loans that the banks carry. They were writing their own overlays on top of overlay on top of overlay. I remember when I was working at a Stagecoach bank,
I think we all worked there.
We actually counted one time and it was just one product. We had 50 overlays. 50. 50. And we got it down to like 12. So it was through that time, right? Everyone panicked, threw on all these overlays, make sure that they were doing what the CFPB said. So it didn't get easier. It kind of calmed, right? And came to a norm.
Right.
I would say.
Yeah, it definitely did relax, which is good because it needed to.
Yeah.
But we didn't just start shuffling out loans. And so, with that, I don't see, again, this is the mortgage mom crystal ball, and you guys can tell me if you agree with me, but I just don't see that we're going to end up in the same situation that we were in once before. I do think that we're going to see some additional properties come listed for sale. I think there are going to be some people that have lost their jobs that will not be able to get back to work. I do see that we are going to struggle a little bit, right? But I don't see that we're going to have that massive, massive downturn. And if you are renting a home, throwing your money away, interest rates are great right now. You've still got to buy a house. If you can afford your payment and if you can afford the house that you're buying and you're digging those roots, like I've said before, and that is your home, that's all that matters. The real estate market can go up, and it will, and it can go down, and it will, and it'll go right back up again, and it'll surpass where it left off the time before.
Right.
And so, real estate is for the long haul. So in my opinion, it's not a bad time to buy. It's a great time to buy. Right now, we still have the majority of the loan products that we've had before. Down payment assistance is getting pretty tight. We don't have any of that right now at the moment where we're at. Jumbo's starting to get tighter, right? But even a refinance, I mentioned this last week too. Property values right now, because everybody's still kind of on lockdown, nothing's happened to property values. The property values are still very good right now. So if you wait a year and property values, we do lose a little bit in value.
Mm-hmm.
You might have missed your opportunity to have been able to remove PMI or maybe take the cash out of the house that you needed, so and interest rates are still very, very good. I mean, I'm quoting rates every day, depending on the type of loan, at 3.5 to 4.5% in rate. And they're still very, very good for what people might need to have, and to get done.
Right.
15-year fix. I was just quoting earlier this week 299. I mean, and it depends on the client. Of course, we've talked about that every time. How much equity do you have? What's your credit score? What kind of property do you have? Are you pulling cash out? Or are you not? Some of the factors that we've seen change are the adjusters. That's something that's coming out right now, as we talked a little bit ago about. It's not necessarily the guidelines directly coming from Fannie, Freddie, FHA, VA, but there's investors that are buying those loans. And we're starting to see those adjusters change, and they're getting more expensive when you're trying to do, a cash out refinance versus adjuster rate and term, because you want to get rid of your MI or you want to lower your monthly payment, right?
Right.
So it's very interesting. Everybody listening, guys, hey, if you guys want to ask us questions, please feel free to do so. Throw them into the feed. We'd be happy to answer them for you. Give us a call. It's 844-935-3634. We'll get you on our calendar. You'll talk with us one-on-one. You can ask for Debbie, ask for Larry, ask for Heidi. It doesn't matter. Whoever's calendar, whoever you like listening to better, feel free to ask for that person, and we'll get you on the calendar. We'll set up a phone consultation with you. Be prepared to talk to us. That's the other thing, is that we get a lot of calls and people aren't prepared. They are not prepared. Know how much you owe on your loan. Know what you think your house is worth. Have a very good idea where your credit score is at. Is there anything else, Larry, that you can
Please know if you have a first and a second.
Yes. If you have a home equity line of credit, what's the rate on your home equity line of credit? Know what your property taxes are.
I was going to say your property taxes, and know whether you paid them or not. Like some people who, they maybe are not included in their current mortgage and they haven't paid their property taxes. Please let us know, because that can change how we structure your loan. So it's important that we know if your taxes have been paid or not.
It is.
If you're up to date.
Yeah, and your insurance policy. So what I find is that a lot of people have their taxes and their insurance included in their monthly mortgage payment. So when they call to start talking to you about maybe doing a refinance, and you ask them what that is, I don't know, it's all included. And they haven't set up that insurance policy since they bought that house 5 years ago, right? So make sure that you know, how much does your insurance cost you? How much do your property taxes run you per year? Not the 6-month bill. You get 2 of them a year. Make sure you know what your total annual taxes are. Because when we talk to you, we want to make sure we're running a payment and we're giving you a quote of the right payment, right? The best to our ability over the phone with no application in our hands. That it's really important. Some of the other things too is, know when, if you've had a late payment, know when that happened, what year and what month did that happen in, because that will change what kind of loan can we do for you, what is available. Just anything that is really particular to you, make sure that you have that information ready so that we can have a really good conversation with you.
Also, if you co-signed for somebody, it's on your credit. So if they had a late, but you co-signed, you had a late. So be aware of anything you co-signed for, anything on your credit. Be aware of that too, because I've happened to talk to quite a few people. They're like, oh yeah, but that's my son's loan.
Yeah, well,
your son's late. So.
Yeah, well, you agreed that you would make sure that your son made his payment. So when he didn't, right? And that's, a lot of people don't understand that. And I get it. That was my daughter's car.
That's hard, yeah.
Right.
And you might not even know.
Right, they may not tell
You know
you.
if you had late payments, because your daughter always makes them and you just assume she makes them on time. She doesn't say, hey mom, last month I made my car payment late.
Right.
It doesn't tell you. So, it's okay if you don't know. It's things that we can talk about, and we can run your credit and get those kind of facts down for you so that you're aware of what's going to happen next.
Right. Absolutely. So, there's a lot going on too that I just want to bring up really fast. There's a lot of tax changes that are happening right now. I actually talked with my tax grandma just this morning, actually. And she was telling me that they actually released some new information that's going to be really, really big, very, very helpful to especially a lot of the, it's going to be for self-employed borrowers. But if you guys are interested in hearing all about that, make sure that you tune in next week. And if you'd like to be able to ask those questions direct to the tax grandma, make sure you guys are watching us streaming live on YouTube. We're going to record, obviously next Saturday's show is recorded on Wednesday right here on YouTube Live. So make sure that you guys find us on YouTube, subscribe to the channel. channel. It's always Mortgage Mom Radio everywhere you go. Turn on your notifications, and that way you don't miss out. But she was talking about some loss carryovers. It used to be many, many years ago that they would allow you to actually take a loss. Let's say that you claim a loss in 2020. They would actually let you take that loss and carry it backwards. So if you had previous year's taxes that you owed money on, you could actually apply that loss to those years to get yourself all caught up. They actually took that away, and one of the changes that she was hearing was that that was coming back. And that's going to be really, really huge. The reason that they're doing that is there's going to be so many people, especially self-employed, businesses that are going to lose money in 2020 because of this shutdown. So this could be something that could be really big and really beneficial. So I did want to make sure that I mentioned that here right now. It's going to be a great show to tune in. I asked her, I said, hey, is there any way you could get on with us tonight and talk to us? And she said, I'm going to be honest with you. I just heard it yesterday. I want to research it. I want to know exactly what it is. I don't want to sound stupid. I don't want to give advice or information that is inaccurate or wrong. So it's going to be really interesting to hear that, because that could be something that is going to be really, really good, I think, for the self-employed.
That's going to be great. Yeah, that's great information.
Yeah, absolutely. I'm trying to think if there's anything else really that's been going on this week other than, staying home, dead raccoons in my front yard.
Oh my God, that's so cute.
Oh, I'm sorry. Go ahead.
Oh, he was cute. So you got to hear this story. It was absolutely hilarious.
Cute.
So for everybody out there knows, a couple of months back, it had been my goal for 3 years to buy this motorhome. And so I finally buy it, right? Of course, we're supposed to be going to Stagecoach next week, and that's canceled. And I had other trips for the kids' spring break. We were supposed to go, and that got canceled, right? But none of us are working at home. And, I love my family to death, but I have an office for a reason, because I can't work at home. Between my horse of a dog that barks and the other little dog that yips and then the 4-year-old that screams, and there's just no getting work done. And I don't have a separate space. I mean, I've got, an 1,800 square foot home. I mean, I live very conservatively. And I don't have a bedroom that I can make into an office, and I can't. And with a 4-year-old, especially Zeke, being autistic and a little bit delayed in, behavior, he's still kind of at that point where he hears me talking. He's coming in, he's crawling on my lap, he's tapping all the buttons, right? He kills me. I mean, I love him, but he kills me. So I literally brought my motorhome home and parked it in front of my house. I set up in there, and that is where I'm working from day in and day out. And let me just tell you, I want to pull my hair out because my internet isn't running fast enough. I guarantee even if I was in my house, my internet wouldn't be running fast enough. Everybody's dealing with that scenario right now. But it does give me the quiet that I need in order to get done what I need to get done. So this morning, I decided, it was like I'd been in there working. I think I got in there at like 7 o'clock this morning, and it was about 10:30, and I was going to walk outside and feel the weather and see how the sun let it beat on my face. And I've got this little wall in my front yard, so I was just going to go sit on that for a minute. And I looked out the window of my RV, and there was a raccoon on my front yard. And he was all like really cute. Like, how your dog would cuddle up at night and sleep on, the carpet or whatever. And it was really sunny right there. And Manny's working with me daily. And I said, Manny, oh my goodness, I'm going to go outside, but I don't want to go outside. I don't want to disturb him. I go, look at how cute he is. He's sleeping and he's sunbathing. So I call my husband, and I'm like, I don't want to go outside. I don't want to disrupt him, but we got a really cute raccoon sleeping in the front yard. He's sunbathing. And so Shane's like, I want to see. So he goes running outside, and he's starts yelling at it. And he's like, babe, that thing is not sleeping. It is dead.
Oh, no.
So I had to call animal control, and they had to come out. And next thing you know, we've got the vultures were literally circling.
Yeah, there's turkey vultures all over around here.
Oh, everywhere. Yeah. And I was like, oh my goodness, I'm going to have the circle of life on my front yard. So I grabbed a box and threw it over the raccoon, and I called back to animal control, and I'm like, okay, I just want you to know it's there. You got to look underneath the box. I don't need these vultures tearing them to pieces in my front yard. So anyway, that's been my catch up with mom. I mean, we usually do our catch up with mom at the beginning, which we kind of sort of started. I mean, we're all going a little stir crazy being at home. But that was my fun story of the day.
That's cool.
Yeah. You got anything good happening over there, Larry?
Trying to think, really. It's been really quiet. I got yelled at on Sunday because I went over to my sister-in-law's house for dinner, and my daughter goes, "Where are you?" She called me, and we were just talking. She likes to talk. And it's about a half hour later, she goes, "Where are you? I hear dogs barking." I don't have a dog anymore. I go, or I'm at Madeline's house. You went out? You're supposed to stay home. The whole point of this is so my 31-year-old daughter scolding me. She wasn't yelling, but she was scolding me. You're supposed to stay home. We need you around. You can't afford to get sick. And no.
Yeah.
So it's kind of interesting. I usually don't get scolded by my daughter.
Oh,
But
yeah. My dad gets scolded by me and my sisters on a daily basis. My mom has been really, really good. My mom is very immune compromised. She's got some lung issues. She's got it's called sarcoidosis. It's a pretty bad um, immune disease. And so, she's been really, really good about staying in. We don't really, we don't have to say anything to her at all. But my dad, oh my goodness, I think we finally calmed him down. He was out every single day doing something. Going to Menards, which is Illinois' Home Depot, going to Home Depot, picking up, whatever. One of his cars broke down, and I'm like, so he's getting cash for the mechanic. I'm like, Dad, you don't need that car to work right now. Like, you've got a really great running truck. It's brand new. It doesn't matter. You shouldn't be going anywhere. So I started ordering him some food. I got him some Geno's Pizza, Geno's East from Chicago, and got that shipped to him. And he's starting to learn all about the Walmart grocery you can order, and then they'll literally put it in your truck for you. So he just pulls up, they put it in, he drives away. So he's getting better. But yeah, all of the parents are getting scolded right now.
Yeah, it's hard. I mean, I know we're all working from home or trying to adjust to what we're doing now. And I think after this, I think businesses will find that a lot of people can work from home. Maybe that will help traffic. Maybe traffic won't be as bad. I mean, people are going to go back to work eventually, but I think businesses will say, well, yeah, maybe some people can work from home and we can still be as productive as we need to be. I mean, I think we are, and a lot of our company was already working from home, so it wasn't a big adjustment. But I think you'll see that, and I think that's maybe some good that will come out of this is that traffic will be less, and we'll learn how to be nicer to people and adjust to maybe social distancing was probably going to go on for a while, from what I hear, but we'll learn how to deal with that, and maybe we'll be better for it. And I mean, you're already saying the air is cleaner. I mean, obviously, I have a big truck I drive every day. Heidi sees it all the time, and filled it up once in the last month. And that was, I mean, so we're all saving money on gas. We're not using our cars as much. We're taking walks in the neighborhood. I mean, you see your neighbors out, but they're on the other side of the street, so you just wave. But I think maybe a lot of good things will come out of this. We have to look at the bright side of stuff, and I think that some good things will come out of this, and we'll be closer for it, and we'll be better people for it. And unfortunately, we have to deal with it. But I think that it's going to be, there will be some positive things that come out of it too.
Yeah, I absolutely agree, and I 100% with literally everything that you said. I think that there's going to be a lot of people that do have office buildings right now that aren't going to need them. They will find that they're just as productive with their people at home. And, that it could be hard for those, owners of commercial buildings. They may find that they've got some more vacancies. Maybe that somehow, this is just the mortgage mom and me always seeing the bright side. And, there's going to be somebody that owns a commercial building. It's going to call me and yell at me. But, maybe we're going to see a couple of vacant buildings that could possibly be turned into Section 8 housing, or maybe could somehow be, changed for the homeless that are on our streets all of the time. I mean, California's got such a horrible problem with that. And, I love that the air is better. And I don't know if you guys have noticed, but there's more animals. You're hearing birds chirping. The air is clear. I mean, we all just have to look at the positive and take of that what we can from this whole situation, and hope for the very best. So I
Yep. Well, I wanted to. My dad's birthday was Saturday, so
Okay.
He was his 64th birthday, and unfortunately, we couldn't be with him. But did a nice little call with him and everything. Can't FaceTime. He doesn't have that type of phone.
Gotcha.
You should have gotten that for his birthday.
Right? No. No.
Yeah.
And then today's my husband's birthday, so
That's right.
Happy birthday,
That's
Jeremy.
right. Happy birthday to Jeremy. And then, for the first time ever, I got to be honest with you. So we did Zoom for Easter, and it was funny because we were on there. I had my mom on, my dad on. They're both divorced. Both of my sisters were on. My brother was on. My kids were on. Their kids were on. Everybody Zoomed, and we did Easter, and everybody made dinner. We all sat down at the table and ate at the same time in our own homes. And I said, this is really cool. I mean, it was kind of nice. I only had to cook for 3 people, and I'm not cleaning up the whole house because it's always my house,
Right.
that everybody congregates at, which I love. Don't get me wrong. I absolutely love it. It is what I do. But, it was kind of nice. And my dad said, well, I got to be honest with you. This is the first Easter that I've had with you kids in probably 30 years. Because
Oh,
we moved when we were little, and we'd go back for the summer, and sometimes we'd go back for a big holiday like a Christmas. But, Easter, I think the last time I do actually remember being there. Now, I got to say, I lived there for a little bit as an adult, so he was probably wrong at that. But having all of us together on Easter and him being there, I mean, it was cool. So I think that there's going to be a lot to be said for this. Me and my friends have been getting on and playing categories, on Saturday nights, and my sister's jumping in. And, I think that there will be great things to come. And so I think that we all just have to be really positive and, you know,
yeah.
I'm thankful that I have a job right now. The mortgage business is still great. We're still locking loans. We're still closing. If you've had that problem, go back and listen to the show. You guys can find it on YouTube if you missed it, if you're just jumping in your car on Saturday morning. We did it on Wednesday. It's every Wednesday, live at 5. Go to YouTube, subscribe to the channel. You guys have questions, give us a call. It's 844-935-3634. That's 844 We Lend for You. And guys, please, if you're listening at a later date, we want you guys to watch us live on Wednesdays. We want you to put those questions in the feed, and we want to answer those for you right there and then. So watch us do it live. Subscribe to the channel, Mortgage Mom Radio on YouTube. Turn on your notifications and start watching the show with us. If you guys want to talk to Larry, call the office, get on his calendar. You want to talk to me, get on mine. And if you guys missed any part of the show, it was great. We gave you guys so much information at the beginning, like an amazing amount of information. Go back and listen to it. You guys can listen to it on my podcast. So anywhere that you guys like to listen to podcasts, go back and listen to it. It's already there. And well, obviously we're live Wednesday right now, so it's not there yet. But by the time people are listening Saturday morning, it's live. It's already up on the podcast. So go back and listen to the podcast from the beginning. Tons of changes, tons of rules, everything about mortgage. Or go to YouTube and watch us. You guys can see what Larry looks like, I look like, Heidi looks like, and
Without makeup or hair done.
yeah.
Just saying.
I didn't
went
put
all
any makeup
natural
on today
today.
either, so.
Yeah, I actually asked Heidi this morning. I said, "Are you gonna put your face on?" She's like, "Nope."
No.
And I'm like, "That's how you know that we've been quarantined." So.
Yep. I've got gray hair, no makeup on. I gave
Yeah,
up.
no makeup on either.
Yeah.
But you did do your hair, Larry. It looks nice.
No, I just happened to shower.
Yeah.
Oh, there you go.
All right, and then one thing I wanted to show you guys, which I didn't, is guys check out my autism awareness.
Oh,
So
Oh,
I know,
Zeke.
yep, I know on radio you guys can't see what I'm wearing, but I think I went a little overboard again. Quarantine time, we have a little bit more time on our hands, and so with it being Autism Awareness Month, it was really important to me. So I got the entire family all the same T-shirt. It's all autism. It all says Zeke on it.
where's mine?
All right, I'll get you one. I'll order it. I got a really cool one that says "Mama Saurus, I'll kick your ass" or something like that. It's really cute. But all kinds of autism stuff, and I do want to make sure that everybody knows it is Autism Month. There's a lot of people struggling with that, whether they're caring for somebody that has it or whether they have it themselves, and be kind. If you see people that are a little bit different, you don't understand, just be kind. My 4-year-old is in the grocery store and still in a stroller or still sitting in the front basket, does not talk. Somebody says hi, he can't say hi back. It is a struggle, and there's a lot of opinions that fly around. And let me just tell you, if you saw him, he looks like a normal little kid. You'd never, ever understand why. We go to a restaurant, and he might scream, like a 2-year-old, and you might think, my gosh, those parents don't take care of him. You know what? It has nothing to do with that. So just, I'm just trying to bring the awareness there. It is
Right.
autism awareness, and everybody just be kind. And if you guys can buy something for autism awareness, please do that. Sport it around, and I just love my little guy. So. Anyway,
And he's the sweetest little boy in the world.
He is. So, all right. Well, that's it. That's our show for the week. We'll be back next week live Wednesday at 5. If you guys have any questions, call us 844-935-3634. Subscribe to the YouTube channel. And